And good afternoon. Welcome into Market Talk. We are live at Commodity Classic in New Orleans here today. Thank you so much for joining us, making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you can find us. All of our Facebook, Twitter, Instagram links there, all of our streaming sources, and much more. It's all online. MarketTalkAg.com. Very pleased to have joined me here in person today. Bryan Doherty with Total Farm Marketing. Bryan, it's great to catch up with you in person. Always a treat and a pleasure, sir. How are you?
Well, likewise, it's an honor to be here and happy to be here. It's great. Thank you, Jesse, for the invite.
Well, I know we have plenty to talk about. We're catching up here in the media room at Commodity Classic. It's busy on the trade show floor today. A lot of producers, a lot of folks throughout the industry here today. And I know one of the big things on their minds is just this volatility in the marketplace. It's continuing. I just think about today, we see wheat down again, quarter beans higher. I mean, but it's been a little bit all over the board. It doesn't feel like the volatility wants to end, Bryan.
It doesn't, and partly when you have volatility, there's usually some fundamental backdrop. And right now, unfortunately, and our hearts go out to the citizens of Ukraine. It's the whole Russia-Ukraine situation that just dominates the market's view. We're in uncharted territory. We haven't had this type of a situation probably since World War II, and the commodity world was different then. So we've got that unfolding, and money looks for opportunity. Is wheat undervalued, overvalued? What does it look like for shipping out of the Black Sea regions? What does it look like for getting a crop into the ground? So the market's job is to really sort of vote and try and find an equilibrium price between buyer and seller. But that's changing so much every day that we just have a lot of things that have unfolded, including a smaller South American crop as confirmed yesterday for soybeans. Corn, the market, it was smaller, but not quite what pre-report estimates we're looking for. But still, smaller world inventories, a lot of uncertainty with the year ahead. You don't have to look at the drought monitor maps and scratch your head too hard. That looks a little scary in Europe and the United States. China continues to say verbally they've got probably their worst wheat crop ever, the winter wheat crop. So things are sticky on the supply side.
Now, you mentioned South America. Let's pick that apart first. I know as well today, CONAP came out with their numbers and they dropped their estimate as well. USDA's number, though, were you surprised they dropped their estimate as much as they did, or do you think that was pretty much spot on?
I think that was spot on, and the USDA seems to, from just an observational perspective, they seem to work toward numbers rather than make these massive cuts, but they made big cuts anyway. It was just a full-blown drought, and it's very easy in a 30-day window to see the crop look good or better than good to poor. And so the big cuts were there. Look for more cuts to come from the USDA. The USDA is probably going to work themselves down under 125. Maybe it's 123, 122. It does look like maybe that is leveling off, but nonetheless, it continues to tighten inventory.
Now, as you're here at Commodity Classic, I know we're getting going today, but I know you've seen growers and talked to folks already. I mean, what is the chatter you're hearing? You mentioned drought and the worry about that. Are farmers more worried about out here right now? Are they worried about just marketing in general in this Wild West environment? What's the big thing that they're worried about right now?
Yeah, they're worried about a couple of big things. So let's hit those. But in general, they're mixed emotion like the rest of us. We all wanted some better prices, and we're in the trough for 7 or 8 years where the market's just offered very little opportunity to sell something above the cost of production. All of a sudden, we get a blow up this year. Their big worry is the rise in input costs and inflation. Sure, you can have $7 corn, but does it even make money? That's their concern, and their bigger concern. They're not voicing it, but I know it. I've worked with customers 32 years, grew up on a farm, all of that. Their bigger concern is that all of a sudden prices tip over. The funds decide there's not a fundamental argument anymore to own it, and it tips over, and technically the corn market sells off while inputs are still rising. And then there's a big area there where now farmers in the year of $7 corn, or actually March corn touched $8, they're looking ahead at potential losses. So it's just they're kind of on pins and needles with the new crop. Good opportunities. But the second thing that's on their mind is what happens if they take advantage of some good opportunities and, let's say, sell ahead and sell 25 or 30 or 50% of their crop when December corn, let's say, touches 650. But 3 weeks from now, it's at 750 or $8. They don't want to screw up and give away opportunities. So it's a little unnerving right now. There's no easy path. There's no easy signals to follow. The good news is we do continue to see the export market remain active at high prices, which tells us the end users covering themselves. It tells us the end users recognizing smaller crop in South America.
And weekly export sales this morning were good. Corn and beans. Wheat was a little shaky, I think, but corn and beans were pretty solid today.
Yeah, well, it's understandable with wheat lock limit higher last week and whatnot, but with the corn and being corn marketing your high, over 80 million bushels, really good numbers there. And then soybeans even better, a little more than the 80 million mark. I think we're 2.2 million metric tons. So right around that area. Nonetheless, just really solid numbers. And what's encouraging there is that on a weekly basis, we get the export sales. On a daily basis, we'll have announced sales if those numbers are over 100,000. So we've been seeing those pretty consistently along the way. But even to get to 80 million, that's a lot of small sales in there too. So that's a lot of activity, a lot of buying.
Very, very true. Another thing I wanted to talk to you about a little bit, and I've heard some of the chatter on Twitter about this and heard from some other folks about how we saw all that volatility here the last 2 weeks or so. We started to see a lot of cash bids get rolled to more deferred contracts instead of that May contract right now. I mean, what do you make of that? Because that seems like a very odd situation that we don't see all the time.
It is and it isn't. First of all, the futures market is inverted, which means May is trading higher than July or the back months. So if you're a buyer of corn and you don't need it for delivery over the next couple of months, you're going to base your bids off of July. It's possible that we saw a lot of the ethanol plants chase corn pretty hard when they saw the market starting to take off, and that they have enough bought, let's say, through March or through April. End users are looking at this and going, well, maybe I can stretch my supply out for another month or two, but I can buy the July. So you are seeing those purchases in the deferred contracts because it's better value. Same thing with exports. We're seeing, daily and weekly sales for new crop a lot earlier than we typically like to see, or typically not like to see, typically do see, which again is reflection that, let's say China is preemptively buying bird and hand mentality, not betting on what might or might not be available out of South America by late spring, early summer.
Very, very true. I know we touched on it. You mentioned a little bit the whole Russia-Ukraine situation. Obviously, this is all tied in. And that's just an ever-evolving situation right now that it just seems like we're trading headlines. I know the last couple of days, this wheat market, we've kind of taken some premium out and off the table.
Yeah.
Maybe a little bit of, we finally came out of being locked limit higher, and it allowed us to trade, and now we're maybe taking some profit off the table here. Is that what you're seeing?
There's some of that. I think a lot of that push, though, is kind of a squeeze. If you've been on the short side of the market, or you have short call options, and all of a sudden the market's up strongly, you're looking to manage your risk and get out. Well, so is everybody else. So you get this kind of mad dash for the door, and the door shut at limit higher. So it's like a room with a bunch of people trying to get out the door, and you have to wait overnight, and the same thing the next day. So finally the door opens and everybody gets out. Now you've got an inflated market that has nothing but air underneath it. So you've got to have new buyers come in, or it just, by kind of force, gravity will just pull it down, or others will say it's too much, too high, too quick. I want to take a shot at selling this. So if you've had wheat on hand, we talked to a lot of farmers that had bushels on hand that sold into these limit higher moves, just saying, I can't pass it up. This is too good. I kind of had my, let's say, extra supply or gambling stocks that got pushed into the market. So once the market peaks and the buyers who are exiting are out, if the new buyers aren't willing to take that risk and the sellers come in and start taking profit, or the sellers, as in people who bought that market, take profits, now you got one type of selling. The other type of selling is people who now thought, well, it's going higher, bought. They have risk orders under the market. Those get triggered. Farmer selling increases. So you can see where all of a sudden it goes from one extreme to the other. And those doors open and the crowd rushes out. Yeah.
Well, I know as well, Brian, we watch this crude oil market, and that's closely tied in with our ag commodities right now. Just all the volatility there. This week we saw the ban on Russian oil imports to the U.S. and natural gas and coal. It felt like we maybe had a little fear trading off that, and then that kind of settled down, and now we're settled down a little bit here as we near the end of the week. Still very elevated, but what's your thoughts with this crude oil market, how it's performed this week, and how it's tying into all the volatility in the ag sector?
Right. So great question. So same type of environment practically. So you talk about a ban on oils. That's very visible. Oh, we're going to have less oil. We're not going to use Russia. So the market says, well, then we got to buy more oil somewhere else, or it pushes the market higher, right? So that's kind of understandable how you could see where people would say, I want to own this. And then as the market goes up, what you hear is, well, it's going to go to 150 or 180 or 200. So there's a lot of emotion with people buying. And I know that I'm in the business, and I get people crawling out of the woodwork asking me, how can I buy this crude oil thing? I heard it's going to 200. So it creates a lot of that interest. The reality, though, is when the market goes higher, you hear things like you heard yesterday, well, maybe OPEC is now going to increase production. So Putin might be having the kind of the ire of the world looking at him, headline pictures of, dead women and children at maternity wards. That doesn't sit well. And so, you could see where OPEC would potentially say, okay, we'll supply your extra needs for now. Maybe we go to Venezuela. I've heard that in the headlines. Not necessarily popular, but you're hearing this. I think what the American public would like to hear is the Biden administration say, okay, we're going to reverse course. We're drilling. We're going to encourage drilling. We want to use our own resources and be energy independent from thugs like Putin.
Very, very true. Let's talk livestock before we run out of time, Brian. I know yesterday's WASDE good for cattle, good on the beef side, hog side. Okay, and maybe some things to talk about there, but felt like the markets didn't really react to a decent WASDE report yesterday, and then today we're kind of lower again. So talk me through what you're seeing in this cattle and hog market. Are we just seeing some pullback, some consolidation? What's going on here?
Well, I think there's a few dynamics. Let's first step back and look at kind of the big macro picture in cattle. They've been in an uptrend all year. Mm-hmm. They've had their pullbacks along the way when COVID fired up again. The war pullback, traders don't like that uncertainty. They worry about demand diminishing. Yet when we look at the macro picture, it's really difficult when you look at these longer term or these cattle on feed reports for a longer term period of time to argue that we're building the herd. And that ultimately is supportive because once we pull out of COVID, you've got the grilling season coming on, you've got a bullish picture, high corn prices. The average age of supposedly the cow-calf operator is 58 years old. Does he really want to pay $7 for corn to his that kind of thing? So is the herd growing? Probably not. The hog herd could grow, probably not. A lot of disease issues this year, a lot of concerns. Now input costs, meal, and there's no quick substitute for proteins or meals. So we think the markets are probably well supported. I think hogs got ahead of themselves trading as high as they did. That's my personal opinion. The cattle market, I think, is just a recipient right now of this uncertainty with the war, what demand might look like. Consumers don't really like to look at their stock portfolio so far this year. That's taken a big bite. So I think people are going to be a little more conservative, but maybe the bigger thing is just, all of a sudden it costs you $1 or $2 more to fill up per gallon to fill up your gas tank did a while back. So I think people are being a little more cautious on what they're spending their money on.
Very, very true. Brian, before we run out of time, any thoughts, any final thoughts you have, anything you might want producers to think about here as we go to wrap up this week?
Yeah, so we're in some really crazy, uncharted times, crazy as in things we couldn't have kind of imagined. We didn't imagine a pandemic. We know it can happen. We don't imagine it happening. We don't scenario as people. We don't sit around every day thinking about, boy, what about if a pandemic hits? What if Russia invades Ukraine? What if this? What if that? I think things to think about macroly is that how do you defend good prices? How do you stay in the game? It's really important to be strategic right now. We know what the insurance levels are and rates, yet there's a pretty big gap between where the market is today and where the insurance levels would kick in if you have average yield. You've got a dry weather pattern in the western half of the United States. You got dry weather in Europe. You get, again, this China crop is supposedly not very good for the winter wheat. You've got a lot of dynamics out there. It's not your job as a farmer to know all of that, but it's your job maybe to talk to people who do what I do, and that is monitor this stuff and look for opportunities. And so my message would be, take the marketing serious. In 2008, we saw corn hit $8, and then within months under $3. I'm not forecasting that, but that's an example of extreme volatility. I think we're back in the extreme volatility. When wheat is limit down 2 days in a row, that's extreme. When it's up limit 2 days in a row, that's extreme. So take advantage of those opportunities, manage your risk, look at the big picture, defend prices, just stay sharp on your marketing.
Very, very true. Well, I know producers are here at Commodity Classic the next couple of days. They can stop and see you in the Total Farm Marketing booth. If they're not, I know they can go online to the website, totalfarmmarketing.com, or give you guys a call to talk if they need some advice and need some help.
Yeah, they sure can. And I still argue, I'm kind of old school. Talk goes a lot for, because I can hear body language sometimes in the talk. In an email, it's sometimes hard. But anyway, get a hold of us. We are here at the show. We have a booth. I believe it's 2215. Just go to the 2200 aisle. There aren't that many there. We're happy to see you and welcome any questions you might have. But I just want to wish everybody good luck, and our prayers are with the Ukrainians and everybody who's fighting the good fight.
And again, if you need to learn more, you can stop and see them in their booth here at Commodity Classic, or go to totalfarmmarketing.com or give them a call, 800-334-9779. Talk about that number a lot. I remember.
Yeah, that's awesome. You got her. Yeah, that's great.
With that, Bryan Doherty with Total Farm Marketing. Thanks for joining me on Market Talk today, sir. Always.
Yes, sir. My pleasure. Thank you, Jesse.
And that's going to do it for Market Talk here on this Thursday live from Commodity Classic. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.